Are you losing VAT in your construction business? Are you missing opportunities? Follow my video and I'll explain more. If you haven't yet, click the bell and subscribe to be notified every time we produce our best pieces of content. So in your CIS construction industry company, do you feel like that you're missing opportunities? Now you've been through a massive time at the minute where inflation has been through the roof. Prices are going up and up and up. So are you making all of the opportunities and not losing VAT that you could be claiming, increasing the profits of your construction business? Number one, VAT registration. You may be a startup business or you may be established and you're getting close to that VAT threshold. So if you want more information on VAT registration, follow my video. I talk about VAT registrations when you need to apply. But are you set up and being VAT registered for your construction business? Or should it have been a while ago? Make sure you've got a really good handle of your numbers, as you will not fall foul to problems later down the line. Who can claim VAT? You can claim VAT as a construction business when you are VAT registered. So that means all services and products that you buy, you will potentially have the opportunity to claim VAT back on all of these costs. These can be massive. Now, in previous videos, I'll speak about with the VAT basics. I speak about knowing who your customers are. So in the construction industry, it's really important who is the end user. So a VAT registered business is not going to care whether you're VAT registered or not, because they can reclaim the VAT on their own VAT returns. But if you're working for an end residential customer where you're doing someone's house, they won't be able to claim back the VAT. So understanding your customers is key. Now, if you get to a certain size of business, you haven't got a choice. You will have to VAT register, but you also have the benefit of claiming all of the VAT on your expenses. Now, if you add this over a quarter or a year, this can come to a sizable amount of money. When to claim VAT? You can claim VAT for your construction business normally on a quarterly basis. When you first register for VAT, you'll have, they will schedule exactly what quarters you're meant to register. It's easy to change this. And one thing that I like to do with most of our businesses is make the VAT quarters in line with the year end. It makes everything so much easier to reconcile as you're doing it at the same points. Now, some construction businesses as well, especially with developers, are going to see their money come at the end of the project. And if they're building a new build from scratch, this is going to be zero rated, which means they're going to be getting constant refunds. So it's really common for developers to do their VAT returns monthly. Now, the downside of that is you have to be organised with your paperwork. So if you're a bit scatty and a bit over the place and you need more time to find things, monthly VAT returns may not be the best solution for you. It may be quarterly. But if you have the systems in place and you've got the records absolutely nailed, who would not want the money in monthly for the project? Because that will aid your cash flow to buy more product, or it will mean that you'll need to invest less capital within your project to be able to build what you're building. How to claim VAT? Now, VAT is claimed where you take all of your VAT on your sales, less all the VAT on your purchases. In the construction industry, you've got a few things that are slightly different. Number one is reverse charge. So if your construction business, you're a subcontractor and you're invoicing another subcontractor, in layman's terms, you won't have to charge VAT on that income. Now, this is great because you get a bigger chance of getting refunds, and who doesn't like receiving refunds? But the downside is you're not getting the ability of that cash in your business that you can use as free cash flows. You would normally file your VAT return quarterly, so you would offset your cost against your income. And if all of your income is standard rated, you would want to be paying VAT over quarterly. This means that you are making a profit, or signs that you will be making a profit. So you are claiming back the VAT on your VAT returns normally on a quarterly basis. VAT release on bad debts can go in two different ways. There are two schemes under VAT that you would normally apply for. On one, you'll either register and claim all your income and expenses on an invoice basis, i.e. when you're meant to pay for it, or you do have the option as well to pay over your VAT on a cash accounting basis, which is what it says on the tin. You pay over your VAT when you physically receive it, or you've paid for it as part of your expenses. You can normally do an easy calculation for your business at the beginning to see which one's going to best suit you and choose it. There are some limits to cash accounting. When you get over to a certain level, it has to be on an invoice basis, but that's for another video. So VAT relief on bad debts will be if you've got a debt that's definitely been written off and you've got notification that they've gone into liquidation, you can write it off at that point. Otherwise, if you are on an invoice accounting basis for VAT, you can only write your invoice off after 6 months. If you're not collected and registered for VAT, you can't invoice and reclaim it. So on occasions, if you're a construction business, it may be a good idea for you not to be VAT registered. So I'll give you an example. If you're working mainly with residential customers who are consumers, they won't want you to be VAT registered because that means your fees are going to be 20% more expensive. So what you would have for that is you would get to keep all of the sales yourself, and it's a bit cheaper. Now, what the downside of that is any materials that you're buying on behalf of the customer, you won't be able to claim back the VAT on these. So bear this in mind. Being non-VAT registered as a construction business can be quite advantageous if you're highly labour only and your income is under 85,000. It can be really powerful because you've got less administration for yourself, but also you haven't got to charge VAT as well. But if you are looking to scale your business to a bigger height than this, then you are going to have to suck up and become VAT registered. There are some times where you can split businesses, but as long as they are clearly different trades. But this is something that's highly complex and is not easy to get right all of the time. So don't use this as a quick fix to get out of it. There are loads of tools to help you in the industry like this. So the main accounting package we use for a lot of our clients is called Xero. It's great at collecting information, but just remember, if you put rubbish into it, you are going to get rubbish out. It also has a great extension called HubDoc. HubDoc allows you to take pictures of any receipts, so you're not constantly scooping them off the bottom of your van. You can just take a picture, upload it to the system and get on with your life. And again, you don't have to keep endless files of paperwork which goes on for 6 years. Once you've got a physical copy of the receipt, you can save it on HubDoc, and so it's clear, and if anyone wants to look it into the future, they can. We work with construction businesses a lot. So if I've got any questions that I can help with, or you'd like a chat further to see how we can help, please click my link below and jump on a discovery call with me. I promise there'll be no pushy sales pitch, and I'll do my best in that time to give you as much value as possible.